Good morning, everyone. Today is the 9th of September. This is Tim Nyland from Zacks Professional Services, and this is our weekly internal strategy call. Normally, I don't do anything pre-scripted in these weekly calls. Normally, it's just us working through the various software systems together, exploring analytical issues of relevance from the prior week, and looking at Wall Street Journal articles and other items that are of interest and that our clients and prospects are talking about. Over the past week, obviously the news and media has been dominated by this technology-related sell-off. So what I wanted to do is create a generic deck of slides that any client or prospect could use to explain exactly what happened over the past week during this sell-off. So only formatting is going to be on the first slide. Clients and prospects will be able to go ahead and email this out to their clients and have this discussion. So let's take a look at what happened over the last week. I've named and titled this The Anatomy of a Profit-Taking Driven Sell-Off. And basically what happened on the 31st of August is that we saw Tesla just continue to rack, daily new highs, and Apple did the same exact thing. A little bit different timing for Apple. On the 31st, Tesla hit an intraday all-time high of about 502.49. And then the very next day on 9/1, Apple actually gapped the open to 137.59 and then rose to an intraday high of 137.88. And then news that Tesla was aiming to raise $5 billion in its largest of new stock in a decade. And this is obviously dilutive, and the Tesla shareholders didn't necessarily like that. And so Tesla and Apple actually began rolling over together. And on the 1st of September, from that intraday high of 137.98, ended up closing at 131.40. And Tesla ended up closing 37 after reaching that intraday high of 239 just the day before. So a tremendous rollover right there we saw. Then the icing on the cake on the 2nd of September was that Bailey Gifford came out and disclosed that it cut its stake in Tesla as their number one position just got to be too big. They basically stated that they're still confident in Tesla. They've obviously been involved with Tesla pretty much since inception. They're one of the largest shareholders. They're a huge asset management firm out in Edinburgh, Scotland. I think there's about 45 or so partners out there. It's a very large firm. But it was this disclosure that was kind of the nail in the coffin, and this is where the sell-off contagion to the remainder of the market really started taking hold. And the interesting thing is that, I sit here and watch this, and, as all of you know, we've been through these failed value rotations. I can't even count how many times this summer already. It's probably been 4 or 5. And so the thought process was, well, maybe this is just another attempt at a value rotation. I mean, it would make sense that some of the fluff would get blown off the top. I mean, these stocks have rallied pretty far. So I started digging in and taking a look at some of the price change information just to see what was going on at the sector level. So this is something that anyone can obviously do in Advisor Tools. Set up the sector spiders as an actual ETF watch list, so not a stock watch list, but an ETF watch list. And from here, you can actually look at intraday price change. So this was at close yesterday, and I'm just looking at some of these value sectors that would, if there were a rotation, it would be evidenced by obviously the financials picking up. That didn't happen. Industrials, some of the industrial names that are more cyclically oriented, still down about 1.9, call it 2%. And then energy, really rough day, down 3.64. A lot going on in the energy patch, really, really soft demand coupled with a firming dollar, which sent oil price, cascading yesterday about 8% at one point during the day. So then I went in and I went to the data tab. So you can see from the overview tab, you can switch over to data, and you can see I've got it circled in red here. And I just went ahead and removed a column and added the price change 1 week. So now I'm looking for any signs of value rotation that may have taken place throughout this entire sell-off. And note that this is as of the 9/8 close. This is yesterday's close. And I'm not seeing any evidence in here of a value rotation. I'm seeing evidence of a technology-led sell-off, which is more than warranted given where the technology sector has come over the last 5 months. In fact, the entire market has really advanced quite nicely on the heels of technology over the past 5 months. And I'm going to say virtually unchallenged. There's only been a couple attempts at a value rotation that sent technology shares down. But other than that, we haven't had a pullback since the COVID crash. And so that's really what we're seeing. And so to reinforce this, I went into the Zacks Research System and I just pulled up a performance chart. And I went in and compared the S&P 500 growth composite to the S&P 500 value composite. And I just looked at performance month to date. And again, this is going to give me a market cap weighted average percentage price change of the average member in each of those groups. And you can see that for value, we're down about 2%. For growth, we're down about 5%. So if there was some kind of rotation going on, you would expect that value may have fared a little bit better. And in fact, it hasn't. And what we're seeing is that obviously growth being the predominant driver, recovery correcting a little bit more than value, but obviously both not faring so much. Next I looked at I went into the technicals, and in Advisor Tools, I went into the technical charting facility, and I set up a 1-year technical chart with relative strength as an overlay. You can look at a lot of different metrics. There's a lot of different good oscillators out there. This is one that I like to use for just looking at channels and upper and lower bounds. A lot of hedge funds utilize RSI for daily stock watch list, buys and sells, that sort of thing. In Advisor Tools, we have the upper and lower bounds fixed on the RSI chart. So 8 is basically your sell indicator. And if it ever gets down to 20, that's certainly a buy indicator on an RSI chart. And 14-day relative strength is by far the most common. That can obviously be overridden. But up top, you've actually got your 200-day moving average. So you can see how much time we've spent well above the 200-day moving average. And this has to do obviously with Tesla. So we've all seen this. What you may have seen last week is it actually breached 80. And when you breach 80, it can definitely lead to a sell-off. In this case, more of a correction. Once you breach 50, you start attracting buyers. And you can see that we're actually down to about 31 now. So perhaps now is when we would experience some buying pressure come back to Tesla. And as I was creating these charts, obviously we are now having a market rally. So this RSI as an oscillator does tend to work fairly well. When we look at Apple, you're going to see exactly the same thing. You're going to see RSI 80. This is a classic sell indicator, overbought. Not a crowded trade of the entire tilt. Again, just overbought. And now we're back down to 43. Again, if you look at the history here, once you breach this 50 line, you start really attracting the buyers. And obviously, we spent some time down here, COVID crisis, well below 50, and you can see what has happened to the stock price since. Now, part of all this that's important to understand is this is not limited to Apple and Tesla. And if you think back to all of my discussions on the Earnings Certain Portfolio and tilt strategies, okay? The tilt stocks that we've selected, the 6 tilt stocks, so it's going to be your Apple, your Microsoft, your Google, your Amazon, your Facebook, your Adobe. Stocks have been your market leaders since 2012. They've been your market leaders this year, and we expect them to continue to be the market leaders. So is it any surprise that when you have this leadership group, and I mean all of them, outperforming, maybe not as good as Apple, certainly Amazon has, but they've all been outperforming, that it wouldn't also drive the S&P 500 up to that same breach of an 80 on relative strength? And in fact, it did. And you can see that the S&P 500 did the exact same thing. And it happened very quickly. So again, now we're back down to where the buy indicators start triggering at 50. People start getting antsy and don't want to miss the next run, so we start getting interest. And you can see that here as well. Here's where we did another retest and then obviously took off from there. So this is the S&P 500. It's no different for the triple Qs, okay? So again, a breach of an 80, and now we're cascading down to that 41 mark. And you can see where buying interest tends to bounce off this 50 line. Certainly once you get below 50 and towards 20 into the oversold conditions. So very, very important to understand that. And again, on the screen here, I'm going back to the Zacks Research System now and pulling up the Earnings Certain Portfolio with the 20% tilts. And you can see here, this is the actual Earnings Certain Tilts portfolio. So this is our 6 stock, Apple, Microsoft, Google, Amazon, Facebook, and Adobe. And what I want to show you here is this performance that has literally been driving the market since 2012, right here. You can see this multiple expansion, the distance between your price line and your orange earnings line continue to expand. And you can see the most recent correction, what that actually looks like in terms of an equal weighted composite, okay? This is very, very normal market action to have these types of pullbacks when you've got a group of stocks that's run up this far. And I have had many previous webinars where I've spoken about the fundamental superiority and in terms of profitability, in terms of valuation metrics that this group maintains. So ROE, ROC, cash flow, return on invested capital, sorts of things. This group changes for that group, right? And this growth trajectory remains intact. I mean, take a look at when you combine that tilt portfolio with either the 30 stock ECP Admiral, the 25 stock ECP Dividend Aristocrat, or the Earnings Certain Portfolio, which is the 75 stock. This is what it looks like from an ECP Admiral perspective. So this is the 30 stock portfolio with the 20 stock tilt. And you can see how that protection on the downside during the COVID crash, and then this just tremendous outperformance here. It's performed very well. Here's the most recent market correction on the Admiral. It's again, very, very normal to experience this. And we've got solid EPS estimate revisions as well for that combined portfolio. So again, we expect this performance to continue even post-COVID. I would love it if everyone could follow me on Twitter at Tim Nyland. And also we do post on ZA Tools as well. Many of my tweets are reposted on ZA Tools as well. So feel free to reach out, contact me anyway if you have questions. This is obviously for the clients that end up receiving this slide deck. You can email advisortools@zacks.com or zrs@zacks.com to actually request a copy of this PowerPoint presentation. And what I want to do just very quickly is show the clients exactly where I'm producing these technical charts. So within Advisor Tools, you simply go to Charting, Technical Chart, and you can change your stocks here in the Securities symbol monitor, so I can go from the SPX to the triple Qs with a simple click. And here's where you can change your moving average. I default it to the 200-day. The RSI, I'd recommend you just keep that at the default 14. 1 year time frame tends to work really well. And that's how it's done. In the Zacks Research System, the performance chart utilizing the composites, the SP5 growth and the SP5 value, that's simply beneath the charts. Go to performance, and we maintain the entire library of the S&P ETF composite proxies in here so that everyone can access these. So that's all I had for today, and we will pick this up next week. Thank you.